How to read the AirDNA statistics. So if you have been seeing numbers here on AirDNA and you're not sure what is going on exactly, I'm going to explain to you step by step. So first, you need to choose either a market or submarket, right? So here on the home page, you should go ahead and click on submarkets, look for whatever submarket you want, or you can look at different markets to invest in. Or if you want to be very specific, you can come here and search for them as I have done before, right? And all you need to do is basically open that up. And now, for example, we have the Las Vegas Strip. And this is the submarket score AirDNA has given it. It has given it a score of 100. Now, what is this based on? What is this score based on? It's based on one, investability. Basically, it means that how this market, performs in terms of having good investment opportunities. So they basically measure the average revenue potential against the average mortgage cost. So basically, you are expected to have a higher revenue than the cost it would be for you to mortgage a property here. Okay. And rental demand basically is how popular this market is in terms of bookings, right? If there's a high booking demand, then there would be a high score. This, in terms of this, it's honestly it's doing okayish, decent at best. And in terms of revenue growth, this is basically when rental listings in this location tend to earn more in, for example, this month than it did last month at the same time last month of last year, right? And seasonality, how much does seasonality affect this market, right? If there's a high score, this means there's low seasonality and there'll be consistent bookings. And this one is doing really bad in terms of regulation because it seems that in the Las Vegas Strip, short-term rentals are is being strictly regulated. So since there is a low score right here, that means there's a high regulation going on, right? Now let's look at the average, annual revenue you're expected to have. So in this market, properties tend to generate about $66,700 on average. The occupancy rate basically means that properties in this market tend to be occupied about, 60% of the time. And then we have the average daily rate as well. Basically, how much hosts were paying, charging from customers to for rent, okay, on average. So people were paying about $350 on average to the host to go ahead and rent here. And this is the revenue par. Basically, it is the revenue generated per available rental. So basically, you divide the total revenue that is generated by the number of available properties in the market. Okay. It's really that easy and simple. Then you go ahead and look at these charts. Now, here you can see how many properties are listed in this submarket. That is a lot of listings. Okay, 3,777. If you look at other areas, for example, this submarket right here only has 25 listings, right? So here you can also go ahead and see what rental channels people are listing on. So we can see that Airbnb did about 38% of people also listing on Verbo, and 22% of the properties were on both websites. Of course, there are other smaller websites that are not accounted for right here. And here we have a breakdown on listings by rental size. You can see that most of the properties are one-bedroom properties, two bedroom or about 28%, three bedroom 6%, four bedroom 2%, and five bedroom 1%. So what this could mean is that there could be a market gap for you right here in terms of three bedrooms or higher, right? You could go ahead and look into that. And we will be comparing some properties later on. And now here you can see the rental growth over the last 3 years in this area. It has grown by about 2%. So you can go ahead and take that into account. And the number of active listings has also increased over the years. As you can see, About 2 years ago, there used to be only 2.4 thousand listings. Now there's about 1,400 or more listings. That number has really spiked up. And here you can see listings by rental type. Usually people tend to rent the entire home, and only about 1% go ahead and rent out a private room. So you could decide to tap into that. If you see that market is underserved, you can go ahead and look into that. This shows the amenities that properties in this area, this market tend to offer. So you can go ahead and look into this and make sure your property has such, amenities to stand a better chance to get rented out. And if I scroll down now, you see, of course, the average occupancy rate, the 60%, and the length of stay is basically 2.4 days. On average, people who tend to book a property stay here for about 2.5 days. And the booking lead time is 46 days, which means people tend to book 46 days in advance. And if you come down here, you see the percentage of the month where it was occupied. So if I go ahead and change to maybe last 3 years, you can see this number has been growing by about 3%. Right? And how long were guests staying, over the last 12 months? You can go and look at those as well, right? So now if I come up here, you can also see the listing. So if I come and click on a property, if I hover over something here, a purple dot, you can see this is the Blue Green Club. This is a new property, honestly. Look, it has 0 ratings. So that's why the revenue is also really bad. Look, 2.6 thousand revenue. Average daily rate is about $657, 7% occupancy. It's a new listing, so we're gonna go ahead and ignore that for now. And this one is also new, right? Let me come here. Maybe let's see something else. All right, most of these properties honestly are new. All right, most of them are new. So what you can do is come here and do this. Go click on the STR listings. Okay. Now we can come here and see what the different properties are. This one has been there for a little bit, 25 ratings, 4.8 star rating. They have 9 bed, 8 bath, can have 26 guests. And as you can see, the revenue potential is about $557,000, and it is doing well. The revenue is almost at the potential, and it's occupied 61% of the time. The average daily rate is 2.5. So you can go ahead and sort these listings as well by maybe occupancy, daily rates. If I change it by occupancy right here, you'll be able to see which properties tends to be occupied the most. So these ones are occupied the most, but these are a little bit newer, on the newer side, which you don't want to base it on. Okay, let's go look at review count. So we're going to look at properties that have a lot of reviews. That means they have been there for a while. Okay, we want to base it on those kind of criterias. Now, if you want to be specific, maybe you're looking to buy only a 1 bedroom. What you can do is come here, click on listings, and choose how many people you want it to accommodate. Let's say 1 or 2 people, right? 1 to 2 people. You want it to be a 1 bedroom. We'll do 1 bedroom, 1 bath. Let's look at these properties. 1 bedroom, 1 bath properties to look at. So as you can see right here, it has, okay, so this is what you can be expecting to make if you buy a 1 bedroom property in this area, but there are others that charge a little bit more. And this is of course, it seems to be a hotel. So this is a private room. This is what you could be making with private rooms, as you can see. 51% occupancy. This one is doing much better, 83% occupancy, and I think you can probably see why. The daily rate is lower, so you can go ahead and see what you probably will be making in this area, and that is really how simple and easy it is.